good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. Well, the markets right now on Friday are very different than what it was during the week. It's been a very topsy-turvy ride. We saw those big gains come Monday when it was the exit poll day. Big crash on Tuesday on the day of verdict. And then came in some stabilization. And right now we are back, or at least close to those all-time high levels. The Nifty just 150 points shy of that all-time high level. And we've pretty much recouped all of those losses that we made on June 4th, which came in as a bit of a shocker to the markets. But in terms of the individual stocks and sectors, it's the small cap index which is firing up quite well. It's the broader markets which is very vibrant, almost a 3% gain coming in on that index. You also have all the sectors which are trading in the green. Of course, it's been led by IT, which is the star performer of the trading session today. So an Infosys, a TCS, small cap names like Mastek, Coforge, Wipro, all of them are higher, anywhere between 5 to 15%. Not just that, you have big contributions coming in from the heavyweights, so Reliance, M&M as well as Infosys. These three stocks itself are adding almost 150 points to the Nifty gain. So that's the kind of fervor that we are seeing in the market right now. And a whole host of stocks trading in very heavy volumes and trading at all-time high levels. Whether it's the real estate names, the likes of Sobha as well as Brigade, or the auto names, the likes of M&M as well as TVS Motors, all of them making fresh record highs. And as is the market mood right now, hitting fresh record high.
Absolutely. What a Friday to close this tumultuous week. I mean, there is no better way to describe what a roller coaster ride this entire week has been. It almost seems like a decade has happened in just this week, 1 week alone. But yeah, good closing on Friday. I just hope we manage to hold on to the gains, if not make up for those another 80 points to close in at an all-time high for the Nifty alone. But look at the broader market contenders. Look at Idea. That scaled up another 5.6% in trade, almost touching that 16 rupee per share mark. Ramco Cements has been a very big mover from the word go today. Another 5.5% uptick there as well. L&T Finance, 5.25% of an uptick. And Anisha was flagging off what's happening within the IT pack. Midcap IT as well is firing all guns blazing. So Birlasoft, Persistent, they're all names which are holding out very smartly indeed. And this all comes on the sidelines of a very renewed vigor by the Prime Minister himself, saying that we will achieve the developed India target by 2047. Just a short while back, NDA had concluded their very important meet. He's saying he's going to be giving 3 crore new houses, committed to guarantees. NDA stands for New Developed Aspirational India. So pretty much a continuation of the policy. Yes, a little bit more focus and a little bit more of a populist nature. But that said, let's first talk about where the markets are headed next. We will be cutting across in just a short while and play you some key sound bites as well from that NDA meet, which just got concluded. But Kunal, what's it looking like? You think we can scale up this 80-point distance that we have from the record high today itself?
Yeah, frankly, so I think after that strong recovery day before yesterday and yesterday's move for the index, I was actually of the opinion that today maybe could be a bit of a quiet day for the indices, but this is a surprising up move that the markets are still holding on to that 23,000 plus mark, and we managed to scale above the 23,100, which I believe was a key hurdle point for the index. And now I think after this kind of a price recovery with large cap names participating, I strongly believe that this is institutional activity which has come back again into many of the sectors, and large cap names managing to outperform. So that indicates that we should see the index coming back to the life highs 23,300 plus for the index. So would be bullish on the index now, and after today's up move, the resistance which was at 23,100 mark, now that character and the behavior of that level has changed, and we could now be looking at 23,000 as potentially a very strong base for the index over the very short term.
If you've looked at the F&O snapshot, is it still short covering at play, or there is a genuine long build-up also today?
So last 2 days was short covering. Today is short covering for select sectors, like for example IT. There's a definite bout of short covering which has happened because you generally don't see these 2% gap up moves and then 3% or a further couple of percentage points added to these large cap IT names. Certainly that's not the trend which you've seen over the last so many months and so many quarters for these IT names. Add to the fact, names like Reliance, for example, these were all beaten down names. So a possibility of short covering over here is pretty much on the higher side, and I would probably believe that that's a very strong and a positive indication for the markets, because when you see the first round of short covering coming into these stocks, it indicates that long built up is still some distance away, which could take these prices much more higher.
Right. Vinay, hi afternoon. Just about 80 points away from the all-time high on the index alone. Where do you think the push is going to come in from? Because one is suddenly seeing that IT as a sector is what's charged up.
Yeah, definitely. The sectors like IT, the cement stocks have started performing. So FMCG, pharma, all sectors which were underperforming previously have started performing and giving support to the market. And it's just a matter of time that Nifty is heading towards its all-time high. And I don't think the recovery which we have seen, the 2000 points recovery from the 200 days exponential moving average, will go into the vein. So overall, I feel that the kind of breadth is there, the kind of short covering which is going there, the sector rotation and the participation is very strong. And if you were to go by the derivative data, FIs were the net sellers in the index future. Till yesterday, the long to short ratio was 0.21. So there is a huge potential of short covering by the FIs in the index future, and that is what supporting to the market. If you were to look at the put call ratio, that is also at the comfortable level of 1.04 as per the yesterday's data. So it is still not cannot be considered as a overbought despite the sharp recovery we have seen in the market. So these are the data points which is giving confidence to me that Nifty should extend the rally. And after hitting an all-time high, I'm expecting that Nifty will ultimately head towards the target of 23,500. And as Kunal said, that 23,000 has become a strong base. 22,800 was the previous swing highs also. So we can see consider this 22,800 to 23,000 as a strong base for the Nifty. So during the running correction in the intraday, it could find support there and again bounce back. So I am expecting a rally to continue and index is headed for the all-time high and beyond that 23,500 is the next resistance for the Nifty.
Rally to continue. 23,500 is the next pit stop, and the rally is both short covering, which has more room as per Vinay, as well as long build up is something that Kunal is seeing on some of the sectors. But Vinay, I just wanted specific view on a couple of these counters. Paytm, which is of course logged in upper circuit, and mind you, this is the revised upper circuit that we are seeing, because still now the stock only had that 5% limit. It's been revised today to 10%, and the stock has shot up to that. And the other one I want to bring on board is IIFL Finance. Remember in the morning, my colleague Sharad was mentioning as to how perhaps those issues which were there with RBI seem to be coming to an end, and that representations have been made, and that special audit has perhaps got over as well. Vinay, what's your view on a couple of these names, IIFL Finance as well as Paytm?
Yeah, so IIFL Finance is up by more than 12% and today's volume is significant. So price action is very good. But if you were to look at today's high, the today's high is exactly at its 200 days exponential moving average. So 200 days EMA is placed at around 480 odd levels and today it took resistance there only. Though it is sustaining around those levels, sustaining at higher level, but we need to give respect to it because it is into also that into that gap area, the gap down which we saw after the negative news which came in the month of March and it is right now into that gap. So that gap can also act as a resistance and today's high happens to be the 200 days exponential moving average. So 480 is a level we are tracking. Still the primary trend of the stock is bearish, but because of the news it has got a nice momentum back. So we need to see whether it is closing above 480 or not, and above that we can definitely expect a good recovery further on the upside. So it is a conditional after 13% rise. We need to see whether it is closing above this resistance or not. And as far as Paytm is concerned, yes, there is a bottom reversal kind of pattern which can be observed on the chart. 320 has become a strong base because double bottom kind of formation was there, and from that level, it has bounced back nicely. Today, after hitting the upper circuit of 10%, the stock has surpassed its 50 days EMA, exponential moving average, 50 days. So that is also one good development after a bottom reversal. So it looks like that it should extend the rally, though the primary trend is bearish, but the traders who wants to enter in this kind of stock should have a strict stop loss criteria and with the professional trading can be done. So today's low will act as a strong base. So 347 should be the stop loss for your long positions. And I think the way it has moved, the way market is going, it can extend its rally. And with keeping the stop loss of 347 and keep it on a trailing basis, as in when the stock rises, you should trail your stop loss. That's the best strategy in the stock like Paytm.
Oh, that's a strategy on Paytm, which is still down 40% year to date. But, since we were talking about IT buoyancy, hear it out from Sandeep Agarwal as to whether he thinks these are just trading bounces and the sector is just playing catch up, or is there some material tailwind acting for the sector?
Has undergone both time and absolute price correction for last 1.5 to 2 years. when COVID started receding, the attrition rate was the first one to hit the sector very hard, because with the very substantial jump in attrition rate, what happened was margin has come down substantially, and since then the sector has not done well. I think now the attrition rates are under control. Margin should expand, because margin is a direct factor of where your attrition is, utilization is. So I think the revenue growth I don't see will pick up very substantially immediately, because if at all the ECB rate cut has happened now in US also, we are expecting some cool off to happen on the rate front. And if all those things play out, then revenue growth will pick up with a lag effect. So I think at least we are 2 quarters away from where the growth rates will pick up, but the margin should start expanding. We saw some bit in the last quarter numbers also, and I think further expansion will happen in the current quarter, and it will further accelerate with in the upcoming quarters, because with attrition falling, the cost will come down.
Back with closing trades right here on ET now, still counting down to that all-time peak on the Nifty. It seems like a little away, but I don't think 100 points is such a bad gap for all that has happened this week. Let me welcome on board Pramod Gubbi as well and find out what he's making of the market right now. Pramod, hi, afternoon, and what a crazy week this has been. I mean, how do you even describe what happened on Monday with the euphoria, Tuesday with the crash, Wednesday again with the recovery, and now think about it, we're almost closing in on the lifetime high.
Yeah, indeed. That's what markets are. They are volatile. They never go up in a straight line, and that's what makes it interesting as well. And that's what gives opportunities to make money. These inefficiencies and these volatilities are part of investing. And the more you embrace the volatility, the opportunity to make money is better. But yeah, I mean, it's been a crazy swing this week.
Capitalize on this opportunity this week. What's been the action?
Sorry, could you repeat your question?
I'm just saying, how did you manage to kind of tap into this opportunity that the market threw up in terms of making money? What was the action like this week at Marcellus?
Well, I mean, we are known for our inaction. We're long-term investors. We rarely react to such events. And that's been the case this week as well. We have barely changed any of our portfolio positions. But going into a volatile event, our style of investing, our sort of portfolio, which is comprised of strong businesses, fundamentally with strong balance sheets, always tend to do better in times of adversity. So we went into the elections quite strongly positioned for a potential adverse event. But it was not because we expected any adverse event. It's just our style of investing. So to that extent, there's been almost next to nothing in terms of changes that we've made pre or post elections.
Okay. But what have been your portfolio overweights, if one can ask that?
Yeah, so look, we remain bottom-up investors. For us, the business has to make return on capital greater than cost of capital to even come into our radar. Of course, given the direction of the economy, certain sectors are better positioned because it adds a few percentage points in terms of the growth from the near to medium term perspective. And to that extent, the portfolio has been leaning towards increasingly towards capital goods and industrials. Of course, the pocket where we have seen the best combination of growth and value have been private sector banks. That remains a reasonably large allocation for us. Healthcare services remains a decent allocation both across hospitals, diagnostics, and pharma. Consumption has been an area of interest throughout for us. Consumer discretionary, in particular, we've had a decent exposure, and hopefully we expect that to make a comeback in terms of growth. Valuations have become attractive, but growth has been elusive. But I reckon in the coming few years we can expect a recovery on that side as well.
Point taken. So you've been overweight consumption, still like the capital goods space, but we were just hearing the speech from the Prime Minister just an hour ago, Pramod, and he kind of reiterated the fact that it's going to be the pace of reforms, but an accelerated pace of reforms, and all of those top highlights will come up for you on the screen. And he also talked about how the new NDA will stand for new development, aspiration will be a lot in terms of the middle income as well, and they'll continue their focus towards manufacturing and providing affordable housing, all of that. What's so your own expectation, is there going to be a bit of a shift in policy and hence a reset in terms of the sector churns, or do you think it's going to be more of the same, as you said, capital goods and manufacturing, etc.?
I think by and large, it'll be more of the same. This government has been pretty strong in terms of execution on the reform front, execution of public sector capex, public sector infrastructure. All of that is having a knock-on effect on private sector capex. The focus on fiscal consolidation is particularly appreciated. The only thing I reckon the government might take away from these election results is boosting consumption and employment. So far, a lot of the capex activity has been in capital-intensive sectors. There might be some policy action. I'm not an expert, but if I were to read the takeaways, there is some policy action required on labor-intensive manufacturing. To that extent, moving from production-linked incentives to something like employment-linked incentives could be a tweak at best. But otherwise, I reckon it'll be more of the same. The pace of reforms also could be at the same pace. I don't think there would be any sort of hindrance on that. But yeah, the focus on consumption and job creation could be a lot more than the past.
Right. Okay. Pramod, I guess, what's critical is also to understand what to avoid and what not to venture into in a market like this. And many have been debating whether PSUs have run their course and whether they're going to go into a long patch of, price adjustment. Are we going to see some time-wise correction, perhaps? How is it that you're looking at this entire bunch?
Well, I think, like I said, we are bottom-up investors. It's bound to be the case that certain pockets have sort of gone ahead of themselves, or at least ahead of fundamentals, where the market prices are factoring in sustained growth, even in sectors which are fairly utility-like in terms of growth potential. So those pockets will obviously be at the most risk because eventually the markets will shift focus from narratives to actual fundamentals. Wherever there are thematic plays, either focused on defense, power, utilities, energy, and so on, eventually those narratives have to translate into earnings growth to justify the prices. I'm sure in some cases there will be earnings growth coming through which can justify valuations, but there are pockets undoubtedly where valuations have gone way ahead of fundamentals, and that will be at risk. So I don't think it will be appropriate to paint all PSUs with the same brush. There will be some which can perhaps hold up, but clearly there'll be a lot of question marks on many as the earnings season comes after quarter with no flow through from earnings.
But since we are talking about valuations and risk reward, where does IT sector fall in that, Pramod?
Well, IT, most people look at it as defensive, but it remains sort of early stage cyclical, particularly sensitive to global interest rates. So to the extent that we've seen a peak of the interest rate cycle, the chances of cuts are higher today. In fact, starting last April, when the Federal Reserve signaled the peaking of interest rates, we saw a rally in IT in anticipation of potential rate cuts. However, that rate cut hasn't transpired, nor has any sort of pickup in terms of discretionary spending by global enterprises on IT. To that extent, we've seen a pullback of sorts over the last 3 months. Yesterday, with the ECB cutting interest rates, again, expectations of rate cuts have picked up and hence, therefore, a pickup in discretionary spending. But unlike last March, valuations are not that attractive, even if you factor in some sort of a recovery in terms of discretionary spending and growth. I would say perhaps is in fair valuation territory with a little bit of fillip coming in should interest rates correct and expectations of growth pick up, given what we've seen over the last 1 year where companies have missed guidance, they've continuously downgraded guidance, and earnings haven't really followed up with the expectation that the rally last year suggested.
Hey, Pramod, good to have you on the show. And guess what? We've already made it to that all-time high on the Sensex. So yeah, what a magical mark. 76,762 is where we're currently at. And we're closing in at the high point today. It's a solid 2.25%, almost 1700 point move that the Sensex alone has clocked in, and especially in this kind of a tumultuous week when we've had many such great days. Case in point being both Monday as well as Wednesday. But that said, let's get in some closing ideas as well, Kunal, while we count down to the Nifty also making it to the all-time high.
So I'll go with the IT pack, and HCL Tech would be the top pick in the pack. I think the stock today has made a very strong comeback above the 200 DMN after quite some time. So looks very attractive in terms of the price momentum, and HCL Tech is something which I'll go for closing trade.
Right. Vinay, what about your closing ideas?
So I would go for the cement stock. So after a long time, Ultratech Cement has moved well with a momentum, and volumes are also supporting. So price pattern is also given has also given a breakout. So Ultratech Cement can be bought at 10,475. 10,200 should be the stop loss, and on the upside, I see a target of 10,850. The second stock I would pick from the pharma space is a Biocon. So Biocon has been an outperformer from the pharma space, and especially in last two sessions, it has shown a good momentum. So around 337, 338 can be bought. 334 should be the stop loss for the short-term traders for the BTST, and 348 should be the target. So this two stocks I would like to go long for the BTST or 1 or 2 days.
Taken, so all-time high levels on the Sensex already, and the Nifty is what, just 30 points shy of that, because if I have it right, the last time all-time high was 23,339 thereabouts, and we are already above 23,300, so it's just 30 to 40 points left for that all-time high level on the Nifty. We'll do one thing, we'll take a short break while we can, and when we'll come back, perhaps we'll be seeing that level. Welcome back. All-time high level on the Sensex, very close to those all-time high on the Nifty as well. Just around that 30-35 points left on the Nifty to hit that. And what a crazy week it has been. Despite all of that, we are actually in the green for the week, almost by 0.7% as far as Nifty is concerned. And if you look at the top performers of the week gone by, it's clearly FMCG as well as IT, which has been leading the pack. In fact, the IT index up almost 9% for the week, and the FMCG index too almost 8% higher. Auto has also had a good run. In fact, stocks like M&M, etc., and TVS as well, sitting at all-time high levels. And then Media Realty also managed to close in the green for the week. In the red, perhaps it's only the PSU banking space. So for the week, the likes of Union Bank, Bank of India were down in the trading session, but still a very good screen that we have at our hands. So it's a good time then to welcome on board Anand Tandon as well on the show. Anand, hi, good to be speaking with you. What's the view on IT and FMCG? Clearly, this week has marked a complete turnaround in the strategy, or at least it looks like in the buying pattern so far. Would you be a buyer in select IT and FMCG?
Well, FMCG perhaps more than IT. There is no doubt both of the sectors have been underowned and have underperformed quite considerably. Right now, I think the market is looking for areas to rotate into, given the fact that the sectors that have actually led the rally so far, which has been mostly PSUs and so on, may take a breather for a while. And therefore, even though there are no great upticks that are likely in IT at least, one is still looking for sectors which haven't moved so far. And in that context, I think is what we are looking at the movement we are seeing today. There is some case to be made for domestic consumption plays to move up, especially those which are related to rural incomes, because that will undoubtedly have to be one of the areas which the new government has to focus on. And from that context is what I said that I would prefer FMCG kind of stocks more than perhaps the IT ones.
Okay, that's the take coming in on IT. What's the take, Anand, though, on FMCG? You think that was just panic buying that we saw on Tuesday and maybe a little bit of follow-through on Wednesday? Or is there material reason to believe there will be a rural recovery in place pushed by the government perhaps this time?
Well, most of the stars are lining up for a rural recovery, whether it is the fact that, as I mentioned just a while back, that the election mandate does seem to indicate that more needs to be done in rural India. And consequently, the government has to take more measures to increase the income streams there. Also, I think nature itself will take its own course. The monsoon is likely to be good, which will mean that agricultural income will possibly be better. The crop output is likely to be better, and perhaps with some support from the government, you are likely to get better realizations as well. So, as a combination, I expect to see a significant increase in rural demand coming through. And therefore, you are looking for direct farm plays as well as indirect ways uh, of looking at where rural consumption can actually increase demand. FMCG is a default play. You would want to kind of because many of the staples, etc., haven't done anything for many years now. But that said, it's not going to. It's not as if the volume growth will pick up in a big way. And overall, these are very expensive stocks. So from a portfolio sector rotation point of view, I think there is perhaps a little more steam left. Top bottom up, it's not as if it's a screaming buy, but even then, compared to many of the other sectors, it still looks relatively fine.
Point taken. So, but since we're talking about rural recovery, what about the allied segment? And I'm talking about, let's say, chemicals, for instance, or the pumps company, or the other allies which is there in terms of the water infrastructure, etc. Is this also one of the ways to probably play that?
Well, certainly, almost everything that goes into the rural part of the country will be something that will have some triggers. I am not so certain about the water play, etc., because that's largely capex driven and has to be therefore funded by the government. The rural consumption plays are the easier play, and I'm saying, I would expect that even the agri input companies can be doing quite well. So you mentioned chemicals, and specifically, I would look for pesticides, fertilizers, all of that should see a resurgence in demand given the context in which we are operating, which is forecast of a normal monsoon.
Kunal, where is it that you're seeing opportunity within chemicals? I recall, pre-budget, pre-elections when we did the show, you said avoid chemicals altogether. Has your view changed now?
Not really. I think many of the stocks are still trading below their long-term averages. So I think the concern over here, Aisha, is that many of the stocks have fallen down by a margin of 20-25%, the likes of, I think, SRF, Naveen Fluorine, Gujarat Fluor, etc. And add to that Tata Chemicals. And out of them, I think maybe 3 out of 4 or 80% of the stocks within the sector, they're actually still trading below their 200 DMAs. Now, at a point when the markets are into a breakout mode, where they're short covering into underperforming sectors, if stocks like the chemical packs, if they still remain below their long-term moving averages, and there is no meaningful short covering or even a rally which tries to challenge the long-term averages for many of these names, it indicates that the sector would still be a laggard in terms of price performance. So you may have those bouts of rallies for these stocks, if the market also moves up higher. But then I think in terms of a meaningful trend, I would still be a bit wary into the chemical sector. I would believe that if someone is looking to buy, then you have to wait out for a point where, for example, Naveen Fluorine crosses that 3450, 3500 mark, which is almost 5% from current levels. Tata Chemicals, I think closer to 1130, 1140 is the first major resistance for the stock, and I think that could probably decide the start of an uptrend. So I think it's possibly another 5%. For a breakout move for many of these names. I'll wait out for that.
Okay, point taken. So that's the view on chemicals. Morgan Stanley as well as Kunal not yet very positive on the chemicals, might wait for a bit of a turnaround. But time now to take it across to Ansh to get the list of the big price volume buzzers.
Right. Ramco Cement will be the first stock in focus as the stock has given a good breakout from its downward sloping resistance trend line with volume of over 4 times its average volume of last 20 sessions. Also, the stock has surpassed about its 50 DMA, which is a very positive sign. Apart from this, Avanti Feeds will also be in focus as the stock has actually given a breakout from its reverse head and shoulder chart pattern, which was intact since start of this year. Also, the stock has touched 2-year high with volume of over 29 times its average volume of last 20 session, indicating very strong participation in today's breakout. Lastly, Coforge will be in focus as this stock has also given a breakout from its reverse head and shoulder chart pattern, touching 1-month high, forming higher high for 4th consecutive week. So in this phase, this also stock looks positive. And lastly, Steel Authority has high potential of getting into ban list. So keep an eye on the stocks.
Taken. Vinay, what's your view on some of these names that Ansh mentioned, the likes of Coforge, Avanti Feeds, as well as Ramco Cement, and the possibility of SAIL getting into a ban?
mentioned that there is a typical textbook inverse head and shoulder pattern breakout, and today it has also surpassed the 200 days exponential moving average. It was already up above the 50 days EMA. So the IT index has started performing, and reversal bottom formation signs are there. So I think IT could continue to extend this rally, and Coforge is looking good to me. The next resistance for Coforge technically comes in at around 5800. So this positionally target could be around 5800, and the support is placed around 5170 odd level. So I'm expecting this rally to continue in the stock like Coforge. Talking about the sale, it has fallen and retraced up to most of its gains, but still the trend is not supporting. And whenever in the history you've seen, that whenever stock comes into a F&O band, it remains subdued or consolidation into consolidation phase for a while. So from the metal space, sale is not looking that strong relatively. But if you were to look at the stock like Tata Steel and the JSW Steel from the metal pack, there looks much better as compared to sales. So there are other opportunities one can look at. Sale should be ignored as of now for the short-term trading.
Okay, point taken. So yes, sale is interesting, and the bar chart will come up for you on the screen. There was that large green bar, and the stock is right now 4% higher. But in terms of the other, segments that we want to discuss, of course, banking as well as NBFCs is one space. And interestingly, today in the RBI governor's speech, he did talk about some of those NBFCs or the microfinanciers, which actually give small ticket loans, but the interest rates are way too high, or there are some hidden charges which they are not, kind of articulating well to their customers. This is a subject we raised with Viral Shah as well of IIFL Finance, and he believed that some of the MFIs have articulated that they are looking at cutting their interest rates, the likes of Credit Access Grameen as well as Spandana, but the rest of them might have to follow suit. Listen in to the conversation we had with the analyst at IIFL.
Primarily, it's the NBFCs which is there, which actually the NBFC MFIs, where this issue is in terms of the higher rates. The ones are Credit has announced, for instance, that they are going to cut rates. Similarly, Spandana has announced that they are going to cut rates. So we are seeing this trend across all the MFIs, and it should play out for the other MFIs also over the course of next few quarters. Impact is going to be actually gradual, given that these are 2-3 years fixed rate loans. So the impact is always on an incremental basis. So it will take 2 to 3 years for it to play out fully in terms of the financials. And the quantum of it also would vary. If it's a 50 or 100 basis points of kind of a rate cut, in the kind of the construct of the ROAs that MFIs make, it should be easily digestible.
Okay, that's the view coming in from the house of IIFL Securities. In the meantime, just looking at the market screen while we're counting down to the life high and 38 points away now. So once again, making that push, or attempting that push at least, to scale up and bridge the gap from the previous high to now. Holding up a good over 400 points up in the green. M&M, Wipro, Techem, Tata Steel, Ultratech Cement, Infosys, and even Bajaj Finance. These are your big movers in trade today. Bharti as well holding higher by about 4%. Titan looking good by about 3.5%. ONGC up almost 3%. Even L&T and some of the private banking names which didn't quite participate yesterday, they too have made a decent comeback. Kunal, still betting on HDFC Bank and ICICI Bank?
Yeah, HDFC Bank and Axis Bank, I think, yeah, so I think both of these stocks are very strong even at current levels. And, the best part is that these stocks have not yet come back to their 3-day, 5-day swing high, which means the high which was made just 1 day prior to the election results. And that could be a room of another 3% to 5% upside for these names, which means, if the top heavyweight private sector banking stocks are yet to come back to a breakout mode, the bank Nifty should also follow suit. So I think in that sense, I would probably believe that this could be a decent short-term trade, for someone who's looking out even as a next couple of days. I would believe HDFC Bank should probably come back to that 1600 odd mark. So 1595, 1600 could be a immediate target for the stock.
Okay. Anand, is that your feeling as well, that it's the beaten down banking names, the large private banking lot, which will now make a comeback, and it's already begun actually with some of them?
Well, I've been bullish on that sector for quite a while now. It has not performed at all. Every dog has his day. It's perhaps time to get back. At the end of the day, finance and banking related stocks are form almost a third of the Nifty, and that can't be underperforming if the Nifty has to continue to go up. More importantly, both from a valuation perspective historically as well as relatively to the rest of the market, this sector has now become quite cheap. So the larger companies, the private sector players which have been kind of dragging their feet are certainly attractively valued at this stage and are quite likely to resume their growth journey over the next few years.
Anand, what should one do about the rally that we have seen in Amara Raja as well as Excite this year? I mean, part of the street has a clear FOMO feeling because they missed out on that, and the other half is wondering, should they book out? What should they do? Perhaps add. What's your view on Amara Raja as well as Excite? And we should pull up the year-to-date charts for these companies.
So whenever any company kind of goes through a major upswing, I wouldn't like to comment on the FOMO, but the reality is that it basically borrows from the future in terms of the returns that it's able to get. Amar Raja, for example, one of the major issues is what is it going to do in the EV world? We haven't sorted out that problem yet. And therefore, there are some existential challenges if they don't sort it out. Excite at least is better positioned because they have some tie-ups on the EV side as well. So between the two, I think at least in terms of where the business strategy is headed, it is clear that Excite is a little further up the curve than Amar Raja is. That doesn't mean that the management there must not be trying. They must be trying to find some kind of technology tie-ups as well and ways to stay in the EV space, because any battery manufacturer knows that maybe that is something that you'll have to cover. Overall, as I said, there is a certain level of growth that you should expect in these companies. And whenever the growth oversteps itself, you have to be assuming that going forward, that is the future growth is therefore going to be a little less. I don't believe that chasing stocks is necessarily the best way of investing.
Okay, choosing the stock might not be the best way of investing, but in the meantime, this is an issue we've been raising at ET now, and it's about the kind of tumultuous journey that we have seen in the week gone by, and the mutual fund investors which are trying to perhaps, put in some orders to get the mutual funds on June 4th when there was that big decline, couldn't get the kind of mutual fund allocations that they wanted, and the NAVs that they got were of June 5th, which meant that they missed out on the kind of gains that were made within one day itself. And that's the issue. We've kind of reached out to SEBI as well as AMFI as well. My colleague Anurag Shah has been doing the works around it. Let's take it across to him to get an understanding as to what transpired, who got impacted, and what's the way forward. Anurag, fill us in.
Market regulator SEBI has taken cognizance of issue faced by thousands of investors on 4th of June during the election day, where they have invested on 4th before the cutoff time, but they got the NAV of 5th of June. So SEBI has asked for data from all concerned stakeholders, and SEBI will look into the loopholes so in future this can be rectified. So on 4th of June, during the election results, when results were coming, Nifty fall around 6%, and many investors made investments in a mutual fund scheme before the cutoff time of 2 p.m. But thousands of them received the NAV of next June, and on 5th of June again market rallied by 3%. So the benefit or the advantage investor wanted to get from the fall of market, they could not take up that advantage because they got the next day NAV. So exchanges, BSE has just now issued a clarification that there was no technical glitch from exchange side. There were numerous issues where UPI payments were received with a delay. So due to that only the next day NAV was given to the investor. So that is the statement issued by BSE. So there is a probability that payment aggregators must have not settled the money, and that money is not reached to exchanges, and therefore they got the next day NAV. So SEBI is looking into the whole issue, so loopholes can be rectified, and these type of incident should not occur in future.
Okay, in the meantime, let me take it across to Sharad as well, find out what is all the buzz around the dealing rooms. He's been picking up some info on PG Electroplast. Sharad, what's the khabar here?
Well, yes, the contract manufacturers are in focus, and today we saw Dixon Tech also hitting the 10,000 mark. But what we are gathering from the dealers is the stock which is in focus is PG Electroplast. Now, dealers are stating that domestic institution buying is coming and a PMS is a likely buyer. Now, interestingly, the volumes have picked up, coming in at 3 times its 20-day average as the stock is hitting its record high levels. Now, the key domestic institutions which is already invested in the company includes the name of Nippon India Mutual Fund. We did some couple of channel checks also, and what we are gathering from sources is that a large export order is expected for the company, especially in the washing machine, TV and the AC segment. Now this export order is expected to come from an MNC.
Sharad, so that's the latest on PG Electroplast, but you did raise that point in the morning, Sharad, about IFL Finance and the likely special audit that happened and got over on June 4th, and you talked about how the restrictions might be lifted soon. Run us through that story again, because the stock is up 13% right now.
Well, yes, in focus is IFL Finance, and the khabar on the street is that RBI is expected to lift restrictions on IFL Finance over the next 4 to 6 weeks. Now on June 4 itself, the special audit was conducted by RBI and it was completed, and also the company had submitted its reports to the regulatory authority. Now RBI had placed restrictions on the company on the gold loan business on March 4th itself, and RBI had actually observed certain supervisory concerns in the gold loan portfolio. Interestingly, the stock has corrected 32% from the day this was announced by the RBI from the March highs itself, and also the street is expecting that no adverse comments are expected from RBI's findings.
That's all the buzz across the dealing rooms and the chatter that we're picking up. 51 points away. Seems like it's going to maybe happen next week, Kunal.
Yeah, next week,
Yeah.
Monday. I think we'll reserve some jubilations for Monday. Maybe.
And hopefully we'll have reason to, because we have the India-Pakistan match on Sunday, the T20 World Cup, and there is all reason to believe that perhaps we'll have something to cheer. Of course, it's going to be a super Sunday with the oath-taking ceremony as well of the Prime Minister on June 9th, which is Sunday at 6 p.m. But at 8 p.m, all eyes perhaps will be on that India-Pakistan match, which is lined up. Not been a great journey for Pakistan so far, given the debacle that happened yesterday with the United States team, but hoping that they win. India wins against Pakistan as well. So let's see whether we make those all-time high levels on Monday or perhaps today itself, because it's now down to 40 points.
Yep, closing in on that gap. 44 points just left to go. But yeah, let's see whether it happens next week in jubilation of the Super Sunday that's lined up. But anyway, that aside, today, of course, has turned out to be a good day. I don't think that 45-point gap is really that meaningful. We are practically almost there in any case. But Bharti, M&M, Infosys, Tata Steel, these have been some of the big leaders that have been extremely buoyant all through this week. Vinay, looking at the kind of, sectoral rotation that we've had this week alone, barring, of course, Tuesday's crash, where do you think leadership will now emerge come next week?
Leadership definitely will change. No doubt, we have seen some good recovery in the PSUs, which were outperformers previously, but I can see some strength coming back into the sector like cement sector. Then chemical sector has also bounced back from the lower levels. IT index is started performing. And if we talk about the IT, though it has risen more than 8% this week, it is still down by more than 10% from its all-time high. So I think there is a huge potential, and short covering might take in. I take the stocks in IT segment to extend the rally. So I think IT is the index. Another sector which I am expecting to do well is the cement, and followed by the chemicals. So there could be a leadership change in the coming days in the stable market. I'm expecting these sectors to do well.
Okay, point taken. So that's the view coming in as far as some of these stocks are concerned. But let me take some of the BTST ideas as well from our chartist. Kunal, what's the BTST trade?
So I'll go to buy calls. Wipro is the first stock which I would suggest as a buy from the IT pack. Looks attractive for a target of 505. I'm revising the stop loss higher to 475 for traders who are looking at a fresh bet. Balkrishna Industries is something which is also coming back into a breakout mode. So I think after that fabulous up move post results, the stock had gone through a choppy move from 3,100 towards sub 3,000 mark. Now I think it's making a strong comeback. So I would suggest a buy with a target of 3,400. Stop loss at 3,050.
Okay, and Vinay, what about your BTST trade?
I would go with the Reliance. So Reliance has not participated that, and day before election result, it closed on a strong wicket, and after that, because of the market's fall, it fell. But I think it is going to resume its uptrend. Today it is up by 2.5% with a rise in volume. So Reliance at 2940, I'm recommending going long. I'm expecting that it should give a 3 to 4% more. So for the BTST, 2% is okay. So we can expect some target of around 3,000 odd levels in Reliance, keeping a stop loss at 2,900. And the another stock which I would go long is the IRB infrastructure. IRB infrastructure, today we have seen that construction and infrastructure stocks have done very well, and IRB is closing on closing at an all-time high. So though it is up by 10%, but I still believe that it can easily move 5 to 7% in the coming session. So at 77, one can go along with a stop loss of 75, and the upside target which I see in the IRB infra is around 82. So IRB infra in the mid cap segment and Reliance in the large cap segment, I would go long.
Right. Okay. In fact, the other big talking point in the market is what are the themes which are here to stay, and just taking a leaf out of what the Prime Minister as well said on the sidelines of the big NDA meet, wherein the NDA leaders have met the president now and are staking a claim to form the government. He did talk about a greener India. Talking about the future of where he sees the country shaping up. And, one, of course, that is a very big theme that's been playing up in the market as well. We chatted with Vikash Kumar Jain from CLSA and found out as to how this makes or translates into an investment opportunity as well.
I would say that our opinion about those stocks is that they definitely remain great medium-term bets in general. There is clearly talks of, maybe even not just, if you were to look at broader energy and renewables and some of those, there's more talk on the hydro side. There's, of course, a lot of talk on EVs. I just need to divide my view based on horizons. If you were to look at more from a 6-month to 9-month kind of a horizon, that the fact that they have rallied so much could impede significant outperformance in the near term. But having said that, clearly from a more medium-term perspective, they remain pretty good theme.
Okay, so that's the latest coming in from the house of CLSA. Of course, they also came out with the note as to what they expect in the Modi 3.0 era, both for the capex as well as the power sector. But Anand, what's your take within all of these power names? And I'm talking about the thermal energy plays as well as the wind energy plays, which have seen quite a bit of run-up. And even financiers for that matter, PFC, REC. Should one hold on, or would you recommend maybe kind of booking some profits there?
Well, it's a sector which is going to do quite well, and the demand side is very robust at this stage. But having said that, they are utilities at the end of the day, and they are regulated utilities at that. Therefore, the kind of return that you can expect for both NTPC and Power Grid is really dependent on the capex and the capitalization that they do, and therefore the return that they are able to get on their capitalized assets. That automatically puts a cap on both the growth as well as the levels at which they can trade at. Currently, my belief is that they are trading higher than the levels that are fundamentally justified. But given the kind of momentum that the market is in, it may not necessarily mean that investors should rush out to sell. So fresh money buy, I don't think is indicated. If you are already holding on to it, the best I could suggest is that maybe put in a trailing stop loss. These are companies which are very liquid, should not have a problem in exiting if you really need to.
Right, okay, that's the view coming in some of those energy pockets that have seen quite a bit of buoyancy in trade as well. Kunal, REC, PFC, IREDA, of course, doesn't have much of technical history. But given that they've been very active stocks, both on the upside as well as the downside, PFC, REC, what do you foresee now? And you could add an NTPC as well to that list.
So I think NTPC could be something which could be bought, but I would not be rushing into going for bullish bets on REC, PFC, because what typically happens is when the market gets into a sell-off, there are few sectors and which were maybe darlings in the previous trend. Those sectors, they generally tend to lag favor in the next set of uptrend, and I think that's what we've exactly seen for the likes of REC, PFC. You look at even the likes of the OMC pack, I think BPCL, IOC, etc. These stocks are still, I think, 10-15% below their Monday or Tuesday highs for themselves. So that also indicates that the markets, and that too in this kind of a market where we are just about on nudging distance of making a new high on the indices. So I think in that front, I would definitely believe that there is definitely some kind of underperformance which could probably come back into these names. So I think the best level to buy these stocks would be either a retest of the previous lows. If not, then at least maybe another 5% lower from current levels.
Okay, point taken. That's the view coming in on some of these oil marketing companies as well. In the meantime, let's listen into what the market veteran Madhusudan Kela had to say regarding this tumultuous week and how should investors really wade through this volatility. Listen into a slice of the conversation we had with him earlier.
The next 5 years, apart from other thing, I think the rural area will be real focus of this government, right? And as we have seen Mr. Modi's track record over so many years, right? He will recognize it that is where the party has actually not done well, specifically in rural areas. And there is no denial that the purchasing power in rural areas had gone down. It was reflected into the growth of a lot of FMCG companies. It was reflected into our interaction with these kind of companies over the last 3-4 years. I think it will be a tremendous focus area in the next 4 to 5 years. And from a stock market perspective, the new winners actually could come from this sector, right? I'm not at a liberty to talk individual stocks, but we are invested and rightly positioned in this sector, and we will look for more opportunity to invest into this sector, considering the fiscal situation of the government and considering the fiscal powder which they have. I think the government will be very, very proactive and liberal to address the issue of rural India.
Okay, on that note, we'll thank all of our experts for joining in, Anand, Kunal, as well as Vinay. And I'm going to toss it over to Vinny to find out how this magical week is closing in.
Surely, Aisha, magical week, a week where we've seen gains and losses, but Nifty managing to close 23,285 levels, almost near that record high level, 50 points away from that new record high level for the Nifty 50 is what it will be closing at. But let's not forget the Sensex, that managed to touch those record high levels today, and the high was 76,795 levels. Yes, slightly off that mark, but yes, that's what the Sensex closed at. A good gain that we've seen coming in for the Nifty as well as the Sensex. And let's not forget the Nifty also managed to recoup those losses that they'd seen on the election day, verdict day, at the beginning of the week almost, when that 4th June losses, they've managed to recoup that. Similarly for the Nifty Smallcap, let's pull up Nifty Smallcap if we can. That also has managed to recoup those losses and has seen a very good gain today itself. Nifty Mid Smallcap managing to hold on to pretty strong gains right now, and both of them holding on to gains of almost 1.5% to 2%. That's the Nifty Midcap as well as the small cap. Advance decline ratio today clearly in the favor of advances versus declines, so keeping an eye out on that. And obviously in terms of the gainers that we're seeing today, look at it, M&M, Infosys, Tata Steel, Tech Mahindra, all of them surely among the top gainers that we've seen coming in today in the market. Other than that, Reliance Industries, that's the one that also managed to see very strong gains, so we're going to be keeping an eye out on Reliance Industries there. And let's pull up some of these others names. We had the Nifty Auto, Nifty Pharma hit record high levels, IT names today. So let's pull up something like a TCS, Wipro, Coforge, Persistent System, all of them managing to hold on to very, very strong gains. G Shipping, record high levels. We had Dixon Tech, Balakrishna Industries, all of them at record high levels. And let's not forget, for the week also, the Sensex posts the best weekly gains almost in 2 years for the Sensex, while for the Nifty, the best weekly gains in almost 6 months is what we're seeing. So very, very exciting week, surely ending on the positive note.
If you like this video, then like, share and subscribe to ET Now.